What's up? What's up? How's everybody doing? This is Jonathan Silva, yet with another video going over credit, going over financials, how to leverage it to take your life to that next level, right? So today's video is going to break down personal credit, right? This is some of the key factors that you need to keep growing your credit, right? I'm going to jump straight into it. The number one is going to be your credit score, right? A credit score is a numerical representation of your credit worthiness. Is typically calculated based on your credit history and ranges from 300 all the way to 850. In most scoring models, which is FICO, your Vantage scores, there's other types. On average, FICO is the one that you're being used the most, especially for your cars or your mortgages, right? Obviously, a higher score indicates a better credit worthiness, right? Some of the key factors are going to be your payment history, which that's going to be 35% of your credit utilization. That's 30%. Your length of your credit history, which is 15%. How long you've had your credit accounts, and your credit mix. Your mix is going to be the variety of credit accounts, whether it's credit cards, loans, um, credit lines. Literally, just the mix in general is only 10%. Obviously, the new credit, and then your credit report is the credit report is a detailed record of your credit history, maintained by the credit bureaus such as Experian, Equifax, and TransUnion. It includes personal information, name, addresses, obviously your social security number, a list of credit accounts. Like I was saying, your credit cards, the companies, the loans, everything that you're getting, your payment history of each account, public records such as bankruptcies and liens, credit inquiries. So whenever you're going to apply for a credit card, some do soft pull before they do a hard pull, right? A credit inquiry is going to show up on your credit, and that's just letting the credit bureaus know, or the banks, or whoever you're trying to apply for service from, that you have applied for credit in X amount of time, right? So the credit inquiries are definitely going to be a factor in your credit, right? And now there's three types of credit. Personal credit can be categorized into different types: revolving credit, installment credit, and open credit, right? Here you can see the different ones, different types. Revolving credit is a credit that you can use repeatedly up to a limit, such as a credit cards or lines of credit, right? And installment credit, loans with a fixed payment over a set period, such as auto loans, mortgages, or student loans. Open credit, accounts that must be paid in full each month, such as a charge cards or utility bills, right? Number four is building and maintaining a good credit. To build and maintain a good personal credit, consider the following. This is going to be the major part, guys. There's not rocket science to getting a great credit score. It's just building better habits, right? And this is the things that you're going to have to go over. Pay all your bills on time, as payment history is the most significant, right? As I talked about at the beginning, payment history is going to be 35% of your credit factor, which is the biggest, right? Keep your credit utilization ratio below 30%, ideally below 10%, but I always tell people keep it at 0% if possible, right? This is how I was able to get my credit score in the mid 800s. I say about the highest score that I've had is an 811, and literally that was with zero utilization. Usually, how I like to do it is I use my credit cards as a debit card, right? So everything that I use, I pay it down. But to the banks, ideally, they want to see less than 30% in general. But 30% is pretty high, especially if you're going to be paying interest on on that 30%. You want to go ahead and pay it down as much as possible, right? If you're going to go out there and you're going to try to get free products, that's definitely going to help you a lot if you have no utilization, because now the banks are seeing, or whatever institution you're going to go get a loan from or credit from, they're going to see that you pay all your debt down, so it's less of a risk, right? Avoid opening too many accounts in a short period of time. There's a lot of banks. I know Chase, for example, and there's a few other banks that if you have too many open accounts in the year, even the 2 years, they will deny you automatically just based off that. It doesn't even matter how high your credit is, right? So you definitely want to take that in consideration, right? And then you want to maintain a mix of credit types, showing responsible management of different accounts. And why does personal credit matters, right? Personal credit matters in every factor of your life, really, right? It can get you approved for loans, interest rates, your housing, some employments even check your credit, right? Obviously on your insurance premiums, but pretty much having credit makes your life a lot much easier, right? You can leverage your credit. You can pretty much go obtain any products. You know, if you need a new house, a new car, or you simply want a personal guarantee your business to get business funding. Right? That's going to be a whole different topic that I'm going to be going over as well. How to leverage your credit to get business credit and business funding. That's going to be a whole different level, guys. And understanding and managing your personal credit is essential for your financial stability and achieving long-term goals. Regularly monitoring your credit and practicing good financial habits can help you maintain a strong credit profile. Now, at the beginning, I remember where I didn't even know what my credit score was. I didn't even know what apps to use to go check my credit. Obviously, one of the most famous ones is going to be Credit Karma. That's a Vantage score. It's not going to be your FICO score, so it's not 100% accurate. It is not necessarily what a lot of the banks are looking at to give you to see if you're credit worthy, right? Experian, Experian is one of the ones that I personally use, and there's also FICO. Whichever one you decide to use that fits best for you, I recommend get whatever works best for you and keep track of your credit score. That way you know where you're at and you know what you need to fix, right? Whether you have any negative items, you can also look at what I just went over and try to fix your habits, right? If you have late payments, try not to be late no more in that in that category, right? Try to work out a deal with the lenders. You know, try to see if you can make later dates so you can pay it. But the last thing you want is to do is for them to report late payments to your credit, as that affects it the most, right? But definitely, I hope this video made sense. I hope this gives you a better understanding, and I hope 2025 is the year that you take your credit serious, as it can change your life, especially when you combine it with business credit, guys. So if you want to learn about business credit, watch the next video. I'm going to be breaking that down as well. God bless y'all.